Welcome to the Daily News Show. It's the 16th of June and the sun is shining. Think your money is safe? Think again. Today, billions are pouring into Bitcoin, even as central banks hold steady. That's not coincidence. Last week saw $1.9 billion flood into crypto ETFs, with Bitcoin ETPs alone drawing $1.3 billion in new capital. That's institutional firepower on full display. Meanwhile, public companies are racing to build Bitcoin reserves. Metaplanet just topped 10,000 Bitcoin by issuing $210 million in zero-interest bonds, and Strategy added over 10,000 Bitcoin via its Bitcoin-backed preferred stock on Nasdaq. This weekend, though, geopolitical jitters renewed. Israel-Iran tensions pushed oil and gold higher, and Bitcoin briefly dipped below $103,000 before rebounding near $106,000. That drop echoed past crisis moments, challenging Bitcoin's digital gold narrative. On the macro front, central banks are holding fire. The Fed's June meeting expects a pause amid stubborn inflation at 2.4%, and the ECB is signaling further moves depending on trade war dynamics. Global growth forecasts are trending downward. World Bank trimmed 2025 GDP to 2.3%, while the OECD cut to 2.9% for 2025 into 2026. Trade tensions and tariff threats are clouding everything. Equity markets remain fragile even as the dollar hits multi-month lows. So what's driving all this? It's the perfect storm of uncertainty, geopolitics, trade wars, slowing growth, prompting institutional rotation into Bitcoin as both a risk asset and portfolio diversifier. Analysts forecast Bitcoin could climb even further. A new model sees it breaking $444,000 by mid-2026 under supply squeeze scenarios. And it's not just investors. Trump media filed for a dual Bitcoin Ether ETF, planning a $2.5 billion crypto treasury. The timing couldn't be more dramatic. Central bank pause, global growth slowdown, rising political risk, and capital pouring into crypto. This is the crossroads. Institutions are betting big on Bitcoin as the next macro hedge. But is it safe? The recent pullback shows it still behaves like a risk asset in crises, not yet a true safe haven. That's why smart investors are combining Bitcoin with low volatility assets like gold, bonds, and even cash buffers. Here's the takeaway: if global uncertainty persists, and with trade wars and geopolitical hotspots heating up, Bitcoin stands to gain from both inflows and narrative momentum. But as it proves, it's no gold surrogate in every storm. It's volatile, reactionary, and still earning its stripes as a macro asset. So what should you do? If you're institutional or high net worth, consider Bitcoin as part of a diversified risk-off toolkit, not the umbrella itself. And keep eyes on central bank signals. When policymakers shift from pause to cuts, risk assets usually rally, and Bitcoin may lead the charge. If you enjoyed this breakdown, don't just watch. Like, subscribe, share, and join the conversation below.